What do I do when my positions go out of range? There's a few ways to think about this, but this is a great opportunity to look at one of my portfolios and talk through how I think through it. So as you can see, I got two positions in range. I got this wrapped ETH USDC that's in range. It popped into range yesterday, so that's awesome. I've got a 15% wide range. It's doing 200% APR, which is a bit of an exaggeration. I'm hoping that it shows the true APR, which is a bit closer to like 80, 90%. That's what I shoot for, especially with markets. There's a lot of volume. And then I got this BTC USDC position that's been in position for a while here. And again, I think it's probably closer to 200%, but you can print with BTC over on Aerodrome. Now I have two positions that are out of range. This one is just out of range, as you can see. And this position is quite a bit out of range. It's been out of range for about 3 weeks now. And I've got multiple options here, but you've got to be careful. Every time you click the button, you're locking in permanent loss, and we need to understand that. Now you can do a snuggle rebalance, which in this instance would look something like this. I would rebalance it just within range. There we go. And I would lock in minimum impermanent loss, but you still have to understand the dynamics that are happening every time you rebalance it. And plus we have our 24 to 48 hour rules. So typically, and again, every market conditions could be a little bit different, but for the most part, when things go out of range, I sit on my hands for 24 to 48 hours. I don't touch it. I find most of the time the markets just bounce back and I'm right back in range. Now, obviously, 3-4 weeks ago, we saw this massive dump. And what I see a lot of people do, they ride this all the way down. Their stomachs, they're getting sick to their stomach because their portfolio value, this is, by the way, on paper, is dropping. And at some point, they can't handle it, which is usually at the worst timing as well, because fear is at an all-time high. The RSI index is way oversold, but they choose to sell or rebalance anyways because they're craving the daily fees. Yet they're not realizing they may be locking in a few $1,000s of impermanent loss, and it may take 40 days to make up for that impermanent loss and just come back to break even. You've got to do the calculation in your head. So when the market's dumped here, I always ask myself a few questions, one of them being, would I hold this asset long term, which I ask before I get into positions anyways, and the answer for ETH is yes. I would hold it down to 14, down to 12, down to 1,000. In fact, I would buy more. I believe, you don't have to, but I believe ETH is massively undervalued, so I don't mind buying more of it. I don't mind if my positions go out of range and I can convert it into ETH. I'm buying more ETH. And so in this instance, when I was in range from $2,000 to $2,300 ETH, as the price of ETH dropped, I was getting converted from USDC into ETH, and I'm okay with that. And now I'm just holding ETH, which I would hold anyway. I bought more 3 weeks ago. It doesn't bother me if we start looking at our portfolio on like a daily, weekly, or even monthly basis, we're going to get stressed out because that value of your portfolio is going to fluctuate constantly. I see it as I'm opening a bunch of cash flow positions with assets that I would hold long-term anyways. And if the markets do correct, I don't care because the whole time we're taking profit, in this instance $20,000, which is probably about twice as much as I expect, but obviously I'll take it. Then I can take my rewards every single day and I can stack stable coins so when the market's correct, I can deploy it and buy more of the assets that are undervalued. This last big dump was BTC, ETH, and I got my hands on a bunch of Sowing, which was up like over 20% in 24 hours. To the traditional investor, that would take 2 years to make. I think a lot of people are refusing to play this game long term. They're looking to get rich quick, or they're not yet approaching the markets as an investor, and they're getting hurt because of it. We hope, and I hope this YouTube channel snaps us out of that. I hope to brainwash you into being an investor. Make sure you like this video, subscribe, and leave a comment. Just get notified when these videos come out. We do 3 to 4 videos a week. They're completely free. We have a free DeFi course, and of course we have our Underdog Investor community where we're building a freaking army of investors in the decentralized finance space, which will only be bigger in 5 years than it is now. So get in early. Anywho, my point is being out of range. It's not a bad thing. It's not like you're doing anything wrong. You're gonna get out of range, and the tighter ranges you set, the higher probability ultimately of being out of range, but it's not the end of the world if you're investing in assets you want to hold long term. You're using your LPs to accumulate more assets. So let's just say you owned, 10 assets here and they were worth, I don't know, $10,000. Market dumps. You still own 10 assets, but now they're maybe worth, half as much. They're only worth $5,000. Most people would freak out and they think that they're losing the game and they'd probably exit and never return. The smart investor says, okay, I still own 10 of those assets. Now I own 10.1. Now I own 10.2 because I'm creating yield. Now 10.3, 10.4, 10.5. Hey, I own 11 assets. Bam, price recovers. And now instead of having $10,000 here, you've got $12,000 here because you have more of the assets. You get the point. And if people could think this way, if you looked less at these candles and all the noise, it's all noise. And you strictly focused on accumulation, year over year, you would see your net worth grow. Last year, my net worth grew by $6 million. $6 million bucks. And over the year, that sounds all great. But if you zoomed in, there was some months where there was massive losses. There was losses in business, losses in my investments, and there were some months where there were massive gains and massive wins. And if you let that get to your head, you won't see the annual returns. I want 100% annual returns. Some months it'll be more, some months it'll be less. Over the last month, my portfolio suffered massively, at least on paper. And now guess what? 3-4 weeks later, it's right back where it was. And if I zoom out, you can see that even a year ago, if you were just accumulating and buying Bitcoin, your net worth would be up, not quite 100%. We're at 66 to 92, but you'd be up like 80%, which is ridiculous. And if you're a savvy investor, you've been yield farming or creating yields in some way, shape, or form during the whole time. And I literally saw people destroyed mentally, emotionally, spiritually when BTC dropped from 106 to 92 or 88 or 80. Oh my God, the world is over. I'm like, you short-term thinking mofo. I'm saying this with love. There's a reason why you're struggling to make any type of gains, even in business. If you looked at your daily or weekly or even monthly P&Ls, you're in for a ride. I'm looking for growth annually, year over year over year. And even then, some years won't work in your favor, but it's only a year. And as long as you're accumulating skills, if you're in business, skills, assets, if you're investing, and you're accumulating that year over year over year, you reap the rewards. I'm not saying this to brag, but I'm hoping this drives the point home. Last year, in the span of like 8 months, I think I bought $700,000 or $800,000 of cars. Audi R8, Lamborghini Huracan, Dodge Charger RT 1969, 1989 Porsche 911. That's a 6-figure car. And people are like, oh my God, like what did you do? I'm like, no, that's stuff that I did 5-6 years ago. Those are investments I made 5-6 years ago, and now I chose to eat some of the fruit. You're sowing seeds every single day. And if we can focus on that, and I really hope this lands, if we can focus on that every single day, and we can sow the seeds energetically, mentally, physically, but also financially, and you can use yields to be able to help you sow those seeds so you can actually accumulate more, then compound interest will take care of the rest. But if a bad 1, 2, or 3 weeks, which wasn't really even that bad, and I'm saying this with love, but if a bad 2 or 3 weeks wipes you out or makes you disinterested, there is no way. I promise you, there is no way, just real talk, there is no way you're going to win this game. Now, if the last 2-3 weeks excited you, yeah, they were scary, but they excited you because you saw opportunity, then you will see success long-term in this game. I can promise you that. I see this in business too. Someone has like a bad week, bad month, bad quarter, and they're like, maybe I'll do something else. The chances of you being successful in business are slim to none. You've got to stay the course. You got to stay locked in. At Lucas Rubix on Instagram if you want more of that mindset content. We also have a program launching called The Code. If you're a UIG member, if you're in our world, that's actually going to be free for you. It's 90 days. It's a complete investor mindset reset to get you locked in, thinking long-term and being pulled by a bigger vision. That 90-day program is called The Code. I really, really want you in it. So if you're in the UIG or if you're an accelerator or fast track, make sure you register for it. If you're not in our world but want access to the code, then there will be some details on the website. You do have to be a UIG member, but if you are, the code will be on the house. Anywho, I'm really big on that because 95% of your results are going to start from here. And I think most people are just focused on strategy or what pool or what to buy. And although that's super important, they're psyching themselves out and they're setting themselves up for failure the second there's volatility in the markets, and they're refusing to actually zoom the F out. I am more bullish now than I was a year ago. This thing is not slowing down. I can't predict what the price of these assets is going to be in a month or 2 months or 3 months, but I could tell you in a year, 2, 3, 4, 5 years, this space is going to be bigger. There's going to be more money in this space, more capital. There's going to be more tech, more volume, more options. There's going to be more people getting into this space, and I want to position myself now to reap those rewards so I can go buy a couple $1 million of cars in a few years. I've got a couple dream cars that are at the $2-3 million price point. And I know if I can sow seeds now, I'll be able to drive the F40s and F50s, the McLaren P1s, like dream cars. And I'm just choosing to sow seeds now So those purchases are like just a swipe of the card at some point in the future. And I don't know if I can stay locked into the process. Now, you may not like cars and you don't want those cars, but whatever that is for your future, sow the seeds now. Really hope this helps. With that said, to bring the point home, I'm not doing anything when I'm on a range. I'm holding these assets long term anyways. And once they come online, I'm sure my rewards will jump from 22 grand a month to 30, 40 grand a month. And in the meantime, I'll be taking my daily, weekly, monthly rewards, stacking them in USDC. And when markets present opportunity, I'll deploy because I always want some capital on the sidelines. Really hope that helps. Like, subscribe at Lucas Rubix on Instagram. Feel free to shoot me a DM in the comments, any suggestions for videos, any questions. I don't want this to just be a one-way conversation. And with that said, I'm cheering for you, and I'll see you in the next video. Peace.